welcome and good morning, everyone. My name is Simon Mack, and I am the Executive Director of the Caruth Institute for Entrepreneurship at the Cox School of Business here at SMU in Dallas, Texas. We are celebrating our 50th anniversary, and you see our new 50th anniversary logo down at the bottom there. It's the 50th anniversary of the Caruth Institute, and even though we're one of the oldest entrepreneurship centers in academia in the world, we continue to move forward and try new things and sharing the latest in entrepreneurship knowledge. And this first ever webinar from the Caruth Institute is a reflection of this forward-thinking mindset. So we're pretty excited to offer this online program to you this morning. I want to thank the team at the Caruth Institute, Julianne Deering and Nancy Hong, for helping us put together this first seminar. So really appreciate that. All right, so what I'm going to do is I got a couple of announcements to make, and then we're going to jump right into our program. The first announcement I want to make is that, as you can see on the host screen that says Caruth Institute for Entrepreneurship, our next webinar will be on Thursday, May 21 from 8 to 9 a.m. This program will be a discussion on family office strategies and is part of our Southwest Venture Forum speaker series. In addition, two entrepreneurs will be given 5 minutes to pitch their startup ideas and capital raise needs. Now, this breakfast event is usually held at a local country club, and of course, we can't do that anymore. So we're going online, and we have decided to offer this event at an optional price. What this means is that when you go to our website, smu.edu/entrepreneurship to register, you'll see that we're letting you set the price you want to pay. We are doing this because we want to help those who are currently experiencing financial challenges the opportunity to still attend our event. For those of you who are not as financially challenged, all sales proceeds will be given to the Prison Entrepreneurship Program. As you can imagine, starting a business as a recently released inmate is normally hard enough, but even harder under our current circumstances. So we will be giving all sales proceeds to the Prison Entrepreneurship Program. So mark your calendars for Thursday, May 21st from 8 to 9 a.m. and go to smu.edu/entrepreneurship to register. All right, my second announcement is that I will be the moderator for today's webinar. So please use the Q&A feature for questions. We will have a formal Q&A session at the end of the webinar. So I suggest you jot down your questions as we go and then type in your questions into the Q&A message box at the end of our interview. We may not be able to answer all questions, so I'll do my best to pick questions that are the most common from the audience. Okay, let's get the program started. About a week and a half ago, I got a call from Cox Marketing Department telling me they got a call from NBC Channel 5 here in Dallas. It was a Thursday afternoon, and Channel 5 was seeking to interview someone experienced with the PPP SBA loan process. Well, just so happens the day prior on Wednesday, I had a conversation with John Terry about his company, Churchill Terry, spending a lot of their work hours helping their clients apply for the PPP. So John is then interviewed by Channel 5 the next day on Friday morning, and the interview was so good, it was immediately run on Friday evening, 6 p.m. and 10 p.m. newscast, and repeated on Monday. So I'm delighted to welcome John Terry as our keynote speaker this morning. John is the founder of Churchill Terry, a management and financial advisory firm formed in 1996. John is also in his 22nd year as an adjunct professor in entrepreneurship at SMU Cox and was named the 2018 Most Valuable Executive MBA Professor. John has also been quoted in Bloomberg Businessweek, Entrepreneur Magazine, as well as major newspapers nationwide, including the Dallas Morning News and the Atlanta Journal. John often serves as a panelist or moderator on topics relating to finance, entrepreneurship, and strategy, and is a member of the Southwest Venture Forum Program Committee. So John, now that the money's gone, let's talk about what is next. So let me start with this first question. John, the headlines read, the SBA is tapped and no longer accepting applications. Is that really true, John?
So, Simon, thank you very much for having me this morning. It's always a delight. So, first of all, let me start with a caveat, and that is, while clarity is evolving, things are stabilizing, what I can tell you is that banks are getting updates on a daily basis, sometimes an hourly basis. As any of you have followed this know, things will continue to evolve. So I can almost guarantee by the end of this hour, there will be new information out there, Simon. So we'll share with you everything we know and just understand that further updates will be coming. So the short answer, the painful answer is yes. The $350 billion that was allocated to the Payroll Protection Program, the PPP program, was announced on Thursday that it had been fully allocated. Now, that doesn't mean distributed, but it's been fully allocated. The money's been used up, as it were. The good news is there's another $250 billion that's right behind it in Congress. It's being held up by some partisan wrestling. We should all sort of be used to that by now. But there is another $250 billion for the Payroll Protection Program. I'll also share with you, I'm convinced, and it may be a different form, maybe a different program, but then that there must probably be a third wave of business funding out there before the end of the year, Simon. But we'll talk about those numbers in more detail in a minute.
Okay, very good. So John, you've given some big numbers, and so my question is, where did this money come from?
Great question, Simon. So, it is big, but for context, the entire CARES Act, of which this is a part, it also deals with airlines, it deals with state and local governments, so on and so forth. The CARES Act was originally $2.14 trillion. If we add this $250 billion when it gets through Congress, we're up to about $2.4 trillion. Just to provide it some context, the GDP last year was about 20.4 trillion. So we're looking at sort of, 10% of GDP. Now, in simple terms, most businesses need to borrow cash at one time or another to make payroll or waiting on collections, to pay vendors, that sort of thing. Essentially, this is sort of the same thing on a massive scale. What's anticipated is, hey, small to medium-sized businesses, in some cases large businesses, are going to need some help to get through because of this shortfall in revenue collections. So that's really what this is on a massive scale. Now, where it actually comes from is essentially the spending is appropriated by Congress. Treasury Department issues treasuries, bonds, which generate dollars, which contribute to the loan fund. The Fed standing behind that. The loans that meet the usage requirements, payroll, keep employees, 8 weeks, that sort of thing, are forgiven by the SBA and the Treasury. So those are sort of the mechanics. Now, the immediate question that pops into your mind has got to be, well, does this mean we're increasing the national debt? And the short answer is absolutely. We're increasing the national debt by this $2 trillion subject to any that's repaid. So whatever amount's forgiven ultimately, then yes, that's what we're increasing the national debt by.
Okay, all right. Well, I guess the government has to do the best that they can for now. So I understand that technically, John, there's actually two programs, right? And if that is true, what exactly are these two programs? And you explain the differences between the two.
Sure, absolutely, Simon. And it's yes. So short answer, the SBA Payroll Protection, the 3P PPP program, keep people on payroll, keep them on private insurance, keep them employed for 8 weeks. The thinking being that within 8 weeks, we should sort of, quote unquote, reopen the economy at some level. We should start to see things turn upward, or the hope is, versus the Economic Injury Disaster Loan Program, which is a long-time SBA program. Shorthand is EIDL, EIDL. Now, most commonly where you've seen this used are like natural disasters. In fact, the biggest deployment was Hurricane Katrina in 2006, and through the EIDL program, they dispersed $1.7 billion. And the thing is, you have broader uses then. You can use it for working capital, you can use it to keep the business operating, you can use it to pay debts, that sort of thing. So 2 different programs. Let me kind of just walk you through a little quick pros and cons of both of these, Simon.
Very good.
So,
very good.
on the PPP program, that's what most people have heard most about recently. First of all, the pros, banks are working this, not just the SBA. So you've literally added, hundreds of thousands extra people working to process the loans. And that's helped a lot. It's simpler as an application. It's just simply payroll information. It's 2.5 times the average monthly pay with limits. One of those big limits is if you have employees compensated greater than $100,000, what you really have to do is calculate it as $8,333 per month. So if you've got a 6-month employee making $200,000, that doesn't qualify for the $100,000 cap. You have to cap it at $8,333, which is more like $50,000. So it's $100,000 annualized. It's a lower interest rate. Now, what first rolled out was 0.5%. It's currently sort of stabilized. This is that evolution at 1%. So you've got 1%. It can be up to $10 million. And it's fully forgivable. Huge pro if 75% or more is used for payroll, benefits, health insurance. The remainder could go to rent, mortgage interest, and utilities, but you've got to keep the same number of employees over this subsequent 8 weeks. Once the disbursement occurs, the 8-week clock starts. The cons are typically they're smaller loans. It's a shorter term, 2 years. There's a limited window to apply, which seems forever now. June 30th was the cutoff, but that will come into play as we get into the next round of $250 billion. And the first payment's deferred, but it's only 6 months before you have to make that first payment. The EIDL side of things, it can be pros up to 30 years. You can get a $10,000 advance, which can convert to a grant. They just simply give it to you and forgive it. They have published 3 days dispersal on approval for the $10,000 component. I don't know that we've really seen that. You do have a 1-year deferral on repayment of the loan. You have broader uses. You can use it for working capital, you can use it for fixed debt, that sort of thing. And the first payment's deferred a year, as I mentioned. Now, here's the downside to the EIDL program. And again, long-standing program. It's the SBA by itself. So you don't have these tens of thousands of bankers trying to get this stuff pushed through. You pretty much have to repay it. It is a loan. Can be up to $2 million. Higher interest rate. So you're paying 3.75%. Not a horrible interest rate, but compared to 1, you're paying, almost 4 times as much. And this to me is the biggest one. A personal guarantee is required for anything over $200,000. So if you get $1 million, you're now personally guaranteed. Let me share something else with you, Simon. Just sort of interesting data. So the SBA typically handles around 62,000 loans a year of all types and deploys about $8 billion. Based on these current stats, the banks have probably received between 4 and 5 million applications. And even if only 50% are passed through, Simon, then over 36 times the number of apps have already gone through the SBA. 36 times have already gone through the SBA, and they've deployed over $350 billion, which is 44 times the typical funding that they deploy. If you look at just the loan numbers, the numbers of loans, there's 24 times the number of loans that have already occurred this year. The only other thing I would point out, because I want this should be should be positive. There's a lot of good things that are happening here, even though the headlines scream, we're out of money. There are a lot of other relief options out there, Simon. There is still the SBA 7A loan program and the 504 program. The 7A acquire businesses, operating funds. 504 is real estate. Those are run through the banks, backed by the SBA. Those are still out there. The SBA is offering, if you have one of those loans, or if you get one of those loans, the SBA is relieving your payments for the first 6 months of those loans, or the next 6 months of those loans. So, there's a big sort of bit of breathing room there with those options. There's still non-SBA loans through banks, if you have the substance to back that up. I see banks providing relief. I can give you a perfect example for one of our clients. Immediately, we talked to our commercial banker about, what the options were, what we need to do. And he said, look, any bank loan, not SBA backed, any of our clients, we'll give you a 3-month deferral on payments, and we'll tack it on to the maturity date of the loan. So in that case, the loan still had probably 3 years to run. So then we wound up with April, May, and June, where we had to make no payment, no penalty, there's no interest. We just simply had to request it. And at the end of the loan term, we'll have to make up those 3 payments. That was great. I've heard of banks simply offering quick short-term loans to long-time clients. You've got other funds out there, the LIFT Fund, Greg Abbott, the Texas governor, has kind of promoted this a little bit. You've got Goldman Sachs, 10,000 small businesses, who has promised to help with this. And then you've just simply got landlords are offering rent deferrals or rent relief because they want to keep tenants in there. Vendors are offering extended payment terms. And then finally, lurking in the background somewhere, there is a new Fed program called the Main Street Lending Program that is supposed to roll out soon. It's another $600 billion in small business lending outside of the PPP loan program. Now, a few little caveats. It is not small businesses. It is larger small businesses. First of all, you've got to have a minimum of $250,000 in EBITDA, earnings before interest, taxes, depreciation, and amortization. It is through banks. The interest rates are pretty good, 2.5% to 4%, depending on what path you go down. 4-year repayment, minimum of $1 million that you have to borrow. So, substantial. There are some upper limits depending on, again, apparently there's a couple of flavors of this, either 4X or 6X EBITDA. You do have to repay it. And then this is through the banks like other SBA programs. And so lenders may choose not to participate. It is a traditional loan. It's not guaranteed. It's just a new program to put more money at the disposal or in the hands of the small business owners.
John, I got tired just from listening to all of that.
Simon, I'm sorry, I got tired. Imagine having to remember that and rattle it off.
So for those of you who are listening and trying to take notes, we are recording, and we're going to make this the video available to everybody. But as you can see, that there's a lot of stuff here, and thank goodness John knows about this. By the way, if you're looking at your screen and you see a person by the name of Christina Churchill, she is from our SMU IT department, and so we want to thank her for helping us put together this webinar as well. Okay, John, let's continue diving deep, all right? So you mentioned all these programs, but aren't there now limitations that change these parameters?
Yeah, Simon, that's again, I largely consider this amazingly successful given the parameters that it was executed under, okay? But it's been widely publicized. Everybody knows the $349 billion from the CARES Act for the payroll protection program, has been fully deployed or fully allocated, if not fully deployed. And so we're now waiting on this next $250 billion. And I guess I'm also again, we have seen the SBA and Congress modify terms along the way. And again, I think it's important they get the money out, so I understand a little, modification. The bigger one that is, I think, perhaps very disappointing is that the EIDL applications. Again, this is sort of the hallmark SBA emergency lending program. And originally, before PPP even became active within the banks, they were like, oh yeah, go, get your application in, go online. Well, we had that experience with our clients. We jumped quickly. And first of all, the website was incredibly slow. It clearly was not designed to handle this rush. It was truly an online application. You filled out online forms, you'd save them and would come back, and you had to upload documentation. There was an announcement of a maintenance window. So I think we started on a Thursday. The maintenance window was at 5 o'clock on Monday, and we got everything submitted and, a thumbs up that, hey, we got everything. And they turned on the maintenance window. Well, that went on for about 48 hours. And what came back up was just a simple page of, here are the forms, download them, fill them out, and send them to us. So early indicators that the SBA just simply was overwhelmed with requests for this. The bigger concern now with the EIDL program, I know of, I may know of one person that's gotten the $10,000, but they're very few and far between that they've deployed anything. The bigger concern, disappointment is the New York Times ran an article a few days ago specifically on this, and they actually had image captures of notices to business owners that said, you can apply, you're in the queue for your $10,000. It still has to be approved by the SBA. It can be forgiven, it'll turn it into a grant. But based on and I don't remember the exact phrasing, but based on the interest in the program, Simon, you shouldn't expect more than a total of $25,000 from the EIDL program. That's a long way from $2 million as a maximum borrowing. So you're now talking about $25,000 instead of anything even close that you might get under the payroll protection program. I think the average payroll protection loan is between $100,000 and $200,000 for most businesses. And of course, the reality is, if you dig a little bit deeper into it, what you find is that I think the SBA only has allocated by Congress $17 billion for the EIDL program. Now, compared to historical averages, plenty of money. So there may have been a little bit of a rush to a solution, and it probably just isn't a very viable solution to try to solve this problem.
Well, okay, so let's sort of go back to what every small business owner is thinking. When am I going to get my money? And so, John, when the stimulus package first rolled out, it made it sound like the SBA loan would give small businesses $10,000 within 3 days. How's that going?
It's really not going very well at all.
Oh, no.
Again, so what this is referring to, Simon, is this is the EIDL program, the old school SBA program. Okay. And this is the $10,000 that should be the front end of a much bigger loan, which now is probably going to be a very, very small loan. And what we know is actually there was a survey. Who did that? The National Foundation for Independent Businesses specifically surveyed their members about EIDL loans. And of the people who said they had applied for them, 4% had been approved and 1% had not been approved. So that's, 95% have heard nothing, which, by the way, is indeed the case with our client. Even though we successfully hit that first wave, clearly would qualify for at least the $10,000 grant, we've heard absolutely nothing from the SBA, which isn't surprising. So the key thing is, again, things are changing rapidly, Simon, as we all see. So it's part of the EIDL program. That was the intent, $10,000 in 3 days that could be forgiven, could be turned into a grant. But you still had to get approved by the SBA to start this. And as we saw, they couldn't even process the applications within a couple of days. And so I think they're just sort of working through that backlog. And we know that there's a very limited amount of money, relatively speaking, for this program.
Okay, so now that we have a little bit idea of the money, so who exactly is eligible? I've heard about companies less than 500, and then over the weekend I heard companies more than 500 are getting this money. And then even the question is how about if I don't have any employees? Can you talk about that? What if I don't have any employees? If I have less than 500 employees? If I have greater than 500 employees? What's all that all about?
So the act, the CARES Act, the Payroll Protection Program, specifies they use 500 employees or fewer as sort of the limit. They made I think a very valid, very important distinction in that they removed that cap for anybody operating under NAICS code 72, which is accommodations and food services. And if you think about it, these are two of the areas that have absolutely gotten hit the hardest very quickly. No one's traveling, then no one's staying in hotels. When restaurants are closed, they've been innovative with takeout and delivery and things like that, but that's not the core of their business. The other thing that's worth noting, and so that's a little bit of where you hear some of these, bigger numbers in that, and we'll talk about that in just a minute. So those are the sort of those exceptions. So nominally less than 500 employees, but it can be larger. And the SBA actually has a size guide. You can go out online and like for NAICS code 72, it'll tell you how big your business can be. The exclusions are, so, well, let me speak a little bit. So there are non-employer firms out there. They're independent contractors.
Right.
And they certainly can apply. They were a little bit, maybe a lot hamstrung, Simon. The business window opened on Friday, April 3rd. So you had small businesses, and clearly there was a mad rush because, again, I take that as a sign of success. It wasn't overly complicated. The whole point was deploy capital quickly to keep people employed, keep these businesses rolling forward. Independent contractors, non-employer firms, to use the government term, their window didn't open until April 10th. And so aside from some other issues, which we'll talk about in just a minute, then I think simply, and it was very much a first come, first served program. So I think basically by the time the independent contractors got in the queue, they were sort of at the tail end. And so, there are some exclusions. If you're in the lending business, then you can't be a part of this. I think SBA employees can't be a part of this. You've got criminal questions, which are fairly standard with any sort of SBA lending. Owners, investors greater than 20% who are incarcerated or have been convicted within the last 5 years are excluded. Illegal businesses are excluded. If you have an SBA loan that's currently in default, you're precluded. Financial business, as I mentioned, they specifically called out live performances of a sexual nature. And we now saw, I think a week ago, on 3/9, was the very first lawsuit from a Michigan dancers club, exotic dancers club, against the SBA for, they're like, constitutionally protected free speech. Why can't we get a piece of this for our employees? So I do think that you probably will see, a few more lawsuits over time from people that felt like they were unfairly shut out, or that sort of thing. So that's sort of who can apply. Largely, if you have a business, particularly if you've got some employees, then you should be able to apply, and you should be able to successfully apply at the end of the day.
All right, John. I mean, again, it's sort of fuzzy at best oftentimes, and it's sort of a moving target. Why do the rules seem so inconsistent between the banks and the process and the amounts? What's going on behind the scenes there, John? What do you think?
Okay, so we probably should have mentioned this at the beginning, Simon. So we've worked on about a dozen of these loans and successfully submitted them, and largely have gotten them funding. And if we've got some time toward the end, I can share a little bit of the experiences with various clients and various businesses and things like that. But let me start at sort of a higher level and come back and really directly answer the questions. Let's not forget, this is largely unprecedented. I mean, the banks set up this program in 7 days. The act was signed on 3/27. The doors opened supposedly on 4/3, which was a Friday. I have no idea why this program wasn't teed to a Monday week start, but largely, certainly by Monday, the 6th, this was rolling. They processed and approved probably about 1.5 million loans for $350 billion in the following 8 days. So love them, hate them, feel cheated, whatever. I sort of have to give a small round of applause to the banks. I know, because we deal with so many clients and dealing with so many banks, and I have some personal insight to this. I know they pulled everyone. So commercial bankers, treasury officers, and literally taught everybody to process loans. Now, they still had to do their regular job, but they actually pushed all of this out. And by the way, that was 12 hours a day or more, 7 days a week that they all worked on this. So you couldn't have done it otherwise. I mean, you see the effect of the SBA trying to do their piece on the EIDL side, and you look at this and go, wow, we've deployed $350 billion in 8 business days. Okay, banks were given an allocation of the $350 billion. So let's just start with this. Okay, Truist, you have X, Chase, you have Y, Wells Fargo. So early on, and this has kind of been lost a little bit, Wells Fargo very quickly stopped taking applications. And you kind of go, wow, whoa, hang on. That seems wrong given their size. Well, it turns out, and this is, prior management at Wells Fargo, certainly not the current leadership team, but Wells Fargo is operating under regulatory caps. And so they were only allocated $10 billion. So first come, first serve, they process through. A couple of days later, we're out. We have nothing else to offer to small businesses at this point. Banks had an allocation, and then banks were given the rules, Simon. They said, look, we want to really push this out. Time is of the essence, as it were. Now, they were given the rules, but then there's been 2 interim rulings issued by the SBA, constant guidance and updates and things like that. What they were not given was standardized forms. They just simply said, here's the rules, make up your own form. And they weren't given a standard document request package. So what we've seen is the forms are not overly complex, but they are different from bank to bank to bank. That would have helped a lot if the SBA had simply said, here's the form, use this form. And I think the banks would have appreciated. And the document request, there's some common themes, but they're sort of all over the map in a lot of cases. You know, for example, I mean, our firm was asked for our articles of incorporation and our corporate bylaws. Well, Churchill Terry's 25 years old. So, I mean, we have to dig through the files to find the corporate documents and everything. But the reality is we have a commercial account. We had to show you this stuff when we opened the commercial account. Surely you have it, but yet that was put back on us. You know, you have to resubmit this to us. So, I mean, you know, the process itself looks like this. You register with your bank. You will receive notice to complete the application and upload docs. In general, our experience has been that's sort of within 2 to 3 days. The bank reviews and approves or asks for revisions. And for example, we have one client where the bank said, and this is kind of interesting, said, will you accept our recalculation of your loan amount? And, you know, not wanting to delay or miss out, the owner said yes. And so what came back was a revision downward of $2. So, you know, seemed like a lot of work for that small savings. But anyway, the bank approves, they send it over to the SBA, who accepts the bank's verification and then issues an SBA loan number to the bank. This is important. This is the golden ticket. Once you have an SBA loan number, once that's given to the bank, then the money is allocated to you. It's set, it's done, it's going, it will come to you. The bank gets that back. They go through the documentation process, which is very quick. It's a very simple loan document. They send it to you, you sign it, you send it back, and they've got some number of days, presumably, to distribute the funds. What we have seen with our clients, our own experience, is funds are being dispersed in less than 12 hours. In a lot of cases, even less than an hour. You know, the paperwork gets back, they say, great, you know, all good. One of the things, and I apologize for sort of dragging this out a little bit, this is kind of what people, I think, you know, how does this really work? What really happens? Why am I not hearing anything? So, you know, standardized forms and standardized docs would have been helpful. Again, I think the banks have done a really good job given the circumstances, what they were tasked with. One of the frustrations tends to be the radio silence. So my experience with all of our clients who have done this is once you submit the package, you don't hear anything until you hear, hey, congratulations, here are your loan documents. So even though that SBA number is the critical milestone, they don't tend to tell you that, and because they've already gotten back, they've now processed the documents. And so it's great, but what you have, and I've just heard this from a number of business owners as well as clients in our own experiences, you're just sort of waiting on pins and needles and have no idea, particularly as the funds were draining out of the hourglass. Am I in? Am I not in? Did I meet the deadline? Did I, you know, do I have an SBA? And it almost becomes, I care less about how long it takes you to disperse it. I just want to know that I'm in. And you know, that I really hope that as we go forward, the banks will get better at just sort of that communication, that status update for small business owners, Simon.
Okay, so I've sort of snuck a peek at some of the questions already, and this is in line with the next questions I was going to ask you, which is, there's still a lot of questions about, am I eligible? How do I know I'm eligible? And so maybe we can approach that question by saying what actually has to be submitted. So John, can you sort of summarize real briefly what actually has to be submitted, and that'll be one indicator in terms of whether we're eligible to apply.
Yeah, no, actually, Simon, that's a great question, and this is one of the areas that clarity has significantly improved over the last. And remember, we're talking about the last 14 days, Simon. It's just it's insane to think about what's had to evolve in this time period. So, you know, general rule is less than 500 employees, other than the exceptions that I talked about earlier. But in general, you know, do you have less than 500 employees? And then it's a matter of, you know, what you have to, so let's sort of talk about the process. We talked a little bit about, you know, you register with the bank, you fill out the application, which again, it varies from bank to bank, but in general, it is very simple for any kind of loan application, because they're interested in speed. So there's that, and then they will come back and say, okay, we need these documents. And here's sort of the core of what we found. So what, oh, by the way, let me back up. So what you're submitting is you need to submit what was your payroll for 2019, and you can include health insurance. What did you pay for health insurance in 2019? What did you put into retirement benefits, the company portion? By the way, same thing for health benefits. You have to subtract where the employee may have contributed. So what did the company pay for their share of health insurance, retirement benefits? State and local taxes, so state unemployment. In Texas, it would be the Texas Workforce Commission. You don't include federal payroll, you don't include 941, Social Security, Medicare, and that's it. So it's those numbers. You take last year, you remove anybody that was over $100,000, or more correctly, anybody that made over $8,333 per month. So you have to cap that. And then you divide it by 12 to get an average monthly payroll. You multiply that by 2.5 and you submit it. So that's what you qualify for in the loan that's submitted. And then you have to put the documentation together, Simon. And what I have seen consistently requested is they want to see your 941s, which are your quarterly federal payroll tax reports, because it has gross wages, earnings, commissions, that sort of thing. They want to see your state unemployment, or in our case, Texas Workforce Commission records, which are also filed quarterly, as to validate the amount and validate number of employees, that sort of thing. And then they just want to send us copies of your health insurance bills that you paid and any retirement payments that you made. So sort of 4 core things: 941, state unemployment, Texas Workforce, health insurance records, and any retirement payments that you made. So not that difficult. Now, the one caveat I'll throw out there, remember, every bank has put their own little twist on this. So I mentioned earlier, we were required to submit our articles of incorporation, our corporate bylaws. I have seen, we have one client that they had to send a W-9, which is simply your record, your EIN number, your federal employment identification number. I would think that would be fairly obvious, but somebody had to do that. I have seen requests for federal tax returns. Again, just a little bit of further validation. Payroll records themselves. So show us all of your employees and all of their payroll for the year. Paycheck stubs, employee list. I mean, so, you know, they've got some latitude in how they can, in what they can request. But that's it. Overall, it shouldn't be overwhelming. Again, the calculation is pretty straightforward now and is not particularly complex. And then, you need the documentation, 941 forms, state unemployment forms, health insurance bills, retirement payments. And that's kind of it, plus any other thing they may ask you for.
Okay, and so again, looking at our questions from the audience, looks like many of them are independent contractors and sole proprietorships.
Right.
They seem to be particularly suffering. So can you talk about people who are independent contractors and sole proprietorships? If you can talk about that briefly, then we'll go into wrapping up our discussion, and then I'll open it up for more additional Q&A. And that way we'll finish in about 11, 12 minutes.
Okay. All right. I think we can probably do that. So, Simon, independent contractors, first of all, I mentioned this earlier, that, they sort of seem to be unfairly suffering a little bit, suffering a bit, as it were. Well, first of all, as you recall, they couldn't start until Friday the 10th. So they're a week behind everybody else who, as you can imagine, there were literally at that point in time, millions of applications in front of them. A lot of them, well, one of the things that came up was, a need to have a commercial account established. A lot of independent contractors don't use commercial accounts, because why would I pay for a commercial account when it's just me? So I just open a regular checking account, make deposits. The bank's happy, all that's good. So they don't have commercial bank accounts. A lot of times they just aren't big enough to reach the threshold for a commercial banker. And so, in times like these where you need to talk to someone, the only person you nominally would talk to would be somebody in the branch or a teller behind the window. And of course, with COVID-19, the banks are closed. So you could drive through. In fact, I know my wife was out, she was going to make a deposit, and it was, I think there was actually a big Verizon crash that sort of hamstrung everybody for 24 hours or something. She said there was a line wrapped around the bank of people sending in big bundles of paper into the in through the teller tubes, because people were like, I have to get my application in. And so they were doing it in paper, in the drive-in window, no less. I think some of the other things that independent contractors typically struggle with, Simon, is, they probably don't have and historically don't need any sort of sophisticated financials or reporting. They probably have a tax accountant. CPAs are probably busy with bigger clients, that sort of thing. And of course, they got started later with this. So now I do want to share one bit of good news, I guess, Simon. I recently spoke to a banker who said that they were concerned that we would get to the end of this and, they would be publicly pilloried for, well, look, you funded all of these loans for all of these bigger accounts and you shut out the independent contractors. And so they very consciously shifted processing resources to smaller and smaller clients, so that just from a sheer numbers standpoint, that they could hold their head up and say, hey, look, we did everything we could to prevent any sort of bias creeping into this. So kudos to the bank that was doing that.
All right, very good. So this is a program from Southern Methodist University, and we are an academic institution. So let me give you sort of a philosophical question and sort of an economic question, which is, John, is this really going to help small businesses? And then we'll end with that question and we'll go into Q&A.
Okay. All right. Fair enough. So I have a couple of thoughts on that, Simon. It clearly it will. I mean, anytime anyone is simply going to hand you, in some cases, very significant amounts of money, and it can be forgiven because you're keeping people employed. Now, that's keep that in mind. That's really important, Simon. Mm-hmm. If we don't, you can take the money, but if you have a massive layoff or half staff or whatever, you're obligated to repay most of that loan. So the whole point is, it is really targeted to at least 75% of this has to go to employee payroll and benefits. And so you've got to keep them employed. So what we know we're doing is keeping people employed for at least another 8 weeks in hopes that the economy starts to come back again. So it was, I think, well designed from that standpoint with that in mind. Keep people at work, keep them on private health insurance, that sort of thing. A couple of things to think about, Simon. I think we have not been, just recently, we've gotten much better about deploying the money, getting the money out. And again, amazing $350 billion got allocated in 2 weeks. But I've said before, and this I think is important, time is as important as money. I mean, if I can't keep them on payroll waiting for the PPP money, then I've either got to go rehire them. How do I do that? Where are they? Just that kind of stuff. So I've really pushed on the leadership, the banks, the SBA. Time is critical to getting this money out. If it takes 4 weeks or 6 weeks, then you'll have failed at one of the principal purposes of the program, Simon. The other thing, and I'll sort of wrap up with this. When all this started, I went and pulled some of my own research because I teach entrepreneurship, and so I always talk about the impact of entrepreneurship on the economy. And the reality is there are about 24.8 billion non-employer firms. I'm sorry, I said billion. That may be, I'll have to go back and check it. Anyway, the point being is there are about 3 times as many independent contractors, non-employer firms, as there are what we think of commercial firms, commercial businesses out there. If you do the math, the average monthly pay, not including benefits and insurance, is about $360 billion for our segment, for the segment PPP is intended to address. So if you add, another 20% for benefits, health insurance, that sort of thing, the reality is, the $350 billion, if it were distributed proportionally, Simon, really only covers about 4 weeks, not 8 weeks. What we know is that it wasn't enough and it wasn't distributed pro rata. The plan is with the additional funds that would help. Even with that though, when you throw in the 2.5, by the time you get the target market, the reality is, and you got to include nonprofits are part of that, tribal businesses are part of that, non-employer firms, plus the regular businesses, plus the extra that come under that NAICS 72 code, restaurants and hotels, accommodations, that sort of stuff. The reality is it's probably closer to $1 trillion that we would truly need if we were truly all going to fund these. Not everybody's going to apply. Today we saw Shake Shack returned their $10 million. So they're the first that I have seen who has said, you know what, we've got capital, and we don't want to take it away from others that may need it more, small businesses. So huge, they probably generated way more than $10 million in publicity. Not that that was their intent, but wow, they actually just returned the money. They said, we'll be okay. Let's put this out for somebody else that really needs it to keep the businesses active. So from that, my point being, time is of the essence. The next $250 billion will be a huge help, but I honestly think there probably will be a third wave, maybe a different program, different form, maybe this Main Street lending program solves the problem, but we've still got a ways to go before we really accomplish what the entire program was set out to do, Simon.
Hey, all right. Well, we are, thank you so much, John Terry. We are nearing our end of our hour. What I want to say is that for those of you who were not able to log in and you're watching this video for the first time, we hit our Zoom maximum. How about that? So many people wanted to come watch this webinar. So we're going to have to work with SMU to get a larger number of licenses, but that's why you were not able to log in, and we apologize for that technical difficulty. So I want to thank you for your participation. Again, I want to thank John Terry. By the way, for participants, you will receive a survey from us regarding today's program. And I hope to see you on Thursday, May 21st at 8 a.m. At the Southwest Venture Forum. Go to smu.edu/entrepreneurship to register. So again, thank you for participating in our first ever webinar, and we will see you again soon. Goodbye, everybody.